Welcome to the Deep Dive. Today, we're getting into the story of Warren Buffett, the Oracle of Omaha. We've got some great material looking at his career, his whole philosophy, and our mission, really, is to pull out the key ideas behind his, well, incredible success for you. Okay, so let's jump in. What's the first thing that really grabs you from the sources?
Well, it's kind of striking how early it all started for him. I mean, the text points out he made his first investment when he was just 11.
No, and that's, wow, just imagine.
Yeah, that early start with numbers, with business, it clearly set something in motion, a really strong foundation.
Definitely. And beyond just that initial spark, the sources really hammer home Benjamin Graham's influence, right, at Columbia.
Oh, absolutely. That seems to be where he really learned the core of value investing.
Finding companies basically trading for less than they're truly worth, hunting for bargains, in a way.
Exactly. Graham's impact. You just can't overstate it.
Yeah.
Buying based on intrinsic value, like a calculated worth, not just what the market's doing day to day.
Right.
And if you look at what Buffett did later, well, he clearly took those principles and really ran with them, mastered them.
Right, and that application is everything. His philosophy, reading through this, it seems to boil down to some key things, like really focusing on long-term earnings, the quality of the management team, and these economic moats. For anyone listening who's maybe newer to this term, what are we actually talking about with moats? What's a good example?
Sure. Think about a company like, say, Coca-Cola.
Yeah.
That brand loyalty is immense, right?
Yeah.
People stick with it. That's a moat.
Oh.
Or maybe a company with a powerful network effect, like the more people use it, the stronger it gets, makes it tough for competitors. That's another kind of moat.
Gotcha. That makes sense. And the source material really talks about his patience, his discipline, it's legendary, waiting for the fat pitch, as he calls it, these great companies that are temporarily undervalued. No jumping on bandwagons, no reacting to market noise, just waiting. It feels almost radical today, doesn't it?
It really does. And the text suggests this wasn't something he developed late. It seems ingrained, heavily influenced by Graham again. And that patience connects directly to his long-term view. That famous quote, "Our favorite holding period is forever."
Right.
It's that long horizon where compounding really does its work, that exponential growth over time.
And then there's Berkshire Hathaway itself. I mean, the story there is just incredible. Started as this failing textile mill, and he turned it into this huge diversified powerhouse.
A total transformation.
It really shows that strategy of reinvesting profits, making smart acquisitions across all sorts of industries, insurance, energy, consumer goods.
And what's fascinating there, too, is how he picks management.
Yeah.
The sources mention he identifies really strong leaders for these companies he buys.
And then lets them run things.
Exactly. He empowers them, gives them autonomy, no micromanaging. He trusts them to do their job.
It's more than just the numbers then. It's about people, too. And, beyond the investing side, the sources highlight Buffett's reputation for integrity, his sort of folksy wisdom. His annual letters to shareholders are famous for a reason. People treat them like gold.
They really are. They offer such clear insights, not just on markets, but on business fundamentals, on the economy, his whole way of thinking. And that emphasis on ethics, on communicating plainly.
Right.
It kind of stands out, doesn't it? Especially in finance sometimes.
It really does. In an era so focused on the short term, his success built on simplicity, patience, understanding the basic. It's a powerful counter-narrative. So wrapping this up, what are the core takeaways for you, if you had to boil it down?
Well, I think it comes down to a few key things, really. Value investing, knowing what something's truly worth. Taking that genuinely long-term perspective. Focusing hard on the business fundamentals, not just the stock price. Having that incredible patience and discipline, and crucially, acting ethically. And these ideas, I mean, they work in finance, obviously, but they feel much broader, don't they? It's a framework for making good decisions anywhere you want to build long-term value.
That's a great point. It makes you think, doesn't it? How could you apply that principle, focusing on intrinsic value, on long-term potential beyond just money? Maybe in your work, your projects, even relationships. Definitely some food for thought there. Thanks for digging into Warren Buffett's world with us today.